Good morning. You're watching The Market right here on 18 Hour with me, Aisha Faridi, Nikunj Dalmia, Avan Dabash in the studios, and festivities have already begun here. So is the case with the market, with crude cracking even further.
There is a war, but there was an impact.
Yeah.
I'll say it again. There is a war, but there was an impact.
Wasn't an impact.
No, there was an impact because crude went up, yields went up,
yes.
but I guess within a week, 10 days, I mean, everything is just neutralized. So the message from the world of commodities is very simple, that demand will remain poor. Geopolitical tensions are passé from a demand supply standpoint, and it is more, and things are now moving in tandem with what the assumptions of the growth for 2024 are. So I'm not at all surprised with the sell-off in crude, but I'm certainly surprised the quantum has been so compressed that in 86 went to 96, and 96 has now come down to almost $80. So that's really been
below $80 in fact. Right?
Yeah, lowest in more than 3 months, and this is perhaps going to be like one of the key triggers for us, right?
No, Avan, it is more than a trigger. It is more like a tailwind, because crude going down means that on the macro front, just when markets were getting slightly worried about the macro implications, I guess crude prices have come crashing down. So crude, I think, is going to be more than a trigger. I think it's going to be a big hurrah for the bulls. And the year-end rally, which I think we've been talking about, everything seems to be coming together. Risk is back, commodities are down, flows are normalizing, short sellers are covering the short positions, and the long bias in the market continues. Mid and small cap stocks, well, the index is at an all-time high, touched an all-time high earlier this week, which means that the correction in the mid and small cap stocks also has come and gone. So looks like we are in for a good Diwali. That's what I can say.
Yeah, though we've been consolidating the past 2 days. The good thing is that the FI selling, while it persists, the quantum has been reducing, at least for the last 2 trading sessions. While you could debate and argue that we barely did anything yesterday, barring a few odd aberrations here and there, it was a very, very narrow band that we were trading in. But yes, the good news is that higher highs and higher lows. So the band slowly is only inching higher, and that gap is getting narrowed. I mean, it almost seems like 2 weeks back when we were sub 19K mark, that seems like history.
So Aisha, you cannot be bearish in this market.
Yeah.
And now it is on your ability to understand risk, you'll have to define your quantum of bullishness. It started with profit booking, then it turned out to be short covering. Now the reverse is happening, which is that short covering led to the mighty recovery last week, and post short covering, the long bias and the long build-up clearly seems to be visible. The broader market is outperforming, and the small cap index has hit an all-time high. So there you go. Fresh shots in the bank nifty, that's the tricky one, but I guess somewhere the short covering has actually started. So I don't think the rebound trade in my book actually is over, and I think the rebound trend may just extend itself for next few days. I still maintain what I maintained, that what we saw in middle of October, late October, was a savage, sharp, and a typical bull market correction. Before you realize the bull market correction has actually started, the bull market correction actually gets over. What I don't like about the market is that IT is still in some kind of hibernation. Reliance is just not chipping in. So now the onus really is with banks. Earnings by and large have been decent. You've got more upgrades than downgrades. So I think that is decent. The data which is coming out on festival demand, I think, will keep the market warm. Just every category we've looked at, just every promoter we've spoken to, just about every data point seems to be indicating that the Indian consumer this time is consuming, and they're consuming how. So if I connect the dots here, global, which is the macro setup, crude, which is down, the bias in the yield is reversed, small and mid cap stocks have come back, earning is looking okay, and the festival indicators are indicating that demand now seems to be really moving in the right direction. When you have so many factors put together, what do? You don't sell. You stay put. And I think that is what you should do.
Okay, strategy is really to stay put and capitalize on all of these factors that are coming together. And in fact, when you look at the overall global markets as well, it's noteworthy to understand the fact that yesterday, while it might have been a muted session, the S&P marked the longest winning streak since 2021 at 8 straight days on the trot. Nasdaq as well eked out a 9th winning day, its lengthiest positive session in the last 2 years. And you also had the Dow Jones that snapped its 7 straight days off again. For the most part, Asia's positive this morning. But pharma, yes, indeed, talking a little bit more about that sector and just look at the performance that we've seen within the entire pharma space on a year-to-date basis. And it's been pretty stupendous in terms of the return. So the question is, are we seeing a structural turnaround within the pharma space, given that generics may be flat, but injectables as a business overall, Nikunj, is growing?
See, pharma is a cyclical sector. I don't think we can use the word, structural for pharma. That I think, markets have realized the hard way that there's nothing structural about pharma, even though the need for pharma could be structural. Within that structural, big picture argument, there are a lot of small, factors which are at play. Not every category in the pharma has made a comeback. So generics are flat, but injectable, which is companies which are making injectables, that's where the change is. Companies which are in the formulation, that's where changes are coming in. So I guess the setup is very simple, that companies like Lupin, Cipla, Dr. Reddy, and to some extent Aurobindo Pharma, some of these companies I think are in a sweet spot. And typically with pharma, when the cycle reverses, it really is going to be a 2 to 3 year cycle, or it could be 18 months to a 24-month kind of a cycle. So looking at what they delivered last quarter, the leverage, the operating margins, how things have moved in terms of market setup, it's easy to imagine that for pharma, I guess not for every pharma company, but yeah, for select large cap pharma companies, I think there is pricing power which is coming back. It is typically what we saw, let's say, what happens with, what happened with banks. When the recovery happened, it started with large banks, and smaller banks, they chipped in. Now within pharma, I think it's the large generic focused companies or US focused companies which in a sense are at a cyclical uptrend. I'm not so sure whether the tide has turned for the entire pharma sector per se, and that's where I think I want to just point out that right now for next couple of months, I think large cap pharma is the trade, mid cap pharma may not be the trade. So if you're buying pharma, you should still stick to the portfolio of large cap pharma rather than treasure hunting in the mid cap pharma. I don't think we are in that cycle that, okay, large cap pharma is going to buy mid cap pharma, mid cap pharma is going to go to small cap pharma. The cycle will prompt you to do such things. But fundamentally speaking, not every pharma company would benefit. It's like COVID time, every pharma stock got re-rated. This is not that, purple patch where everything gets re-rated. Look at IT, not every company's got re-rated. Large cap is down, small cap is doing better. Look at banks. Large cap banks are doing better, small cap banks are not doing well. Within pharma, I think the same thing is at play.
Okay, but taking stock of the year gone by, and it's not actually our market which has been the best performing. It's actually been the beaten down Eurostock 600, which actually has done a lot better. While that has been topping the charts with a 28% return from last summer to now. There's Nifty with a 9% return, and real estate being the firecracker sector, along with, of course, small caps, which have given you on an index basis 36% return.
So Aisha, you analyze the year gone by for market. Now the year gone by for the market actually was largely a global comeback, while Indian markets, they piggybanked on it. What was the highlight for the year gone by? The first, I guess the Samvat year gone by in my book was the first year of no COVID, was a clean year, which is that the COVID effect had waned away, and the effect of the stimulus which central bankers had adopted in order to stem the economic fall, that also completely waned away. So in my book, this Samvat year was the first year both for global markets and for Indian markets where you did not get a large stimulus push. But the gains, I guess, were completely dominated by unexpected sectors, and the outperformance in the small and the mid cap stocks, I mean, it is touch wood, it was just too unreal. The year gone by did not see large wealth getting created by any of the big, corporate billionaires. However, the number of IPOs which went public, the number of new billionaires which moved from small cap to mid cap and from mid cap to large cap, I think for me that really was the highlight. You saw comeback in autos, but an extension in real estate. No return in banks, but a year when IT in a sense got completely challenged. The year gone by in a sense also, if you ask me, was the first big year in, I could say that it really cemented that Indian markets are no longer a one-trick pony. The force of power, I think, has changed, and that is what last 1 year has demonstrated. FIs were selling, large cap stocks did not do well, but DIs were buying, HNIs were buying, IPO market was vibrant, small and mid cap stocks, they went up. So frankly, if you ask me, the learning for me in last 1 year has been that FI चले गए जाने दो, DI यहाँ पर है, वो important है.
Yeah. You're just looking at some of the mid and small cap gainers, and who would have thought it would be these names, right? There's Fact Nikunj, which has actually scaled up 520% from last summer to now. Of course, needless to say, there are a whole host of those defense, shipbuilding, railway names. RVNL, 332% return. IRFC, 245% return. Mazgaon Dock, 214% return.
Now,
and I'm not even talking about Abhi Suzlon, BSC, Kalyan Jewelers, etc.
But the first four names you said, let's put them under one basket, and that basket is PSU.
Yeah.
They're government companies. And, they were the ugly ducklings. Before COVID, I mean, nobody even... Mazgaon Shipyard or Kochi Shipyard, even if they existed, nobody cared. They, in a sense, were really the horsemen, so to speak. So PSUs, the ugly duckling, have suddenly become the swans. And that's how markets are. You have to understand that cycles are at play, and the cycle at play right now is really favoring PSU stocks. Next 12 months would be very different for them, because next 12 months we have elections, and decision making ahead of election has to stall. So the kind of momentum, the kind of order book, the kind of comfort what markets are derived, given that India is going to be becoming more defense, Atmanirbhar in defense, which is evident, and railway is going to be a sizable capex. A lot of those views now will be tested. Why? Because decision making post the budget is going to get stalled, because the country moves into election mode. So it would be interesting. It is a great year, but it would be a very different year in terms of an approach, at least for some of the large government dominated stocks. That's one part of the story. Second, look, small and mid cap stocks are not cheap. You cannot have a situation that tail is going to wag the dog for long. Ultimately, the large cap stocks have to go up. So it really, what we are discussing this Samvat year versus what we may discuss next Samvat year, assuming that markets like the political verdict, it really could be a different verdict. It could be a graph which will say large cap has made a comeback and small cap stocks have underperformed. So I will not be surprised that we may have a mirror image of what we have this Samvat year versus next Samvat year. But yeah, I was looking at some very interesting data. What did well this year? Tomato or Zomato?
Well, both had volatility, but on a net basis, Zomato finally won.
What do you think?
Yeah, I think
Tomato or
both.
Zomato?
Both.
No, what did better?
Zomato.
Zomato. Kunal?
I think first tomato and then it was Zomato.
No, what
Yeah,
did
that's
better?
what I said, na volatility
What did
on
better?
net basis.
Zomato, of course.
No. Tomato prices. Tomato prices went higher than Zomato prices. Now, Zomato has given more than 100% return. I was looking at data yesterday.
Nikunj,
That's
tomato
the data.
prices didn't hit 100 plus. I can vouch for it.
From 40 to 200 tomato. 40 to peak. See, I'm talking about peak.
200?
I mean, that's what the mandi wala used to say.
I don't know.
200 rupiya.
I don't think so, but anyway.
You've not been shopping.
I have been, which is why I've been saying I don't think so.
Maybe you have
She's
some
been ordering
influence.
on Zomato, that's why.
You have some,
Link it.
You have some influence with the sabji wala.
Maybe, yeah.
So 40 rupees. Can we have the graphic back, please? Zomato went up by 163%. So it gained, let's say sub 100 or sub 40 rupees. It went to 400. It went up by 163%. But tomato during the same price actually went up from 40
So
rupees.
what did you buy? A kg of tomato or one stock of Zomato?
Well, I bought a kg of tomato and no money was left to buy one stock of Zomato.
Good one.
Good comeback.
Okay,
But
so
this year, guys, think about it. I mean, you would first buy onions and then cry. Now everyone is crying before you buy the
buying.
onions. So let's see what happens next year.
okay, that remains to be seen. Zomato, tomato, lots to discuss on that front, but also a lot of commentary coming in on what the US Central Bank is doing. Global commentators across the world have been sharing their views. What exactly are they? We've got Vinny standing by to give us all the details. Hi, Vinny, morning.
Morning, and absolutely, let's start with some of the commentary that is coming from Powell. Actually, it's not much of a major commentary. Everyone was watching out for his commentary from the event, but yesterday he didn't make any such big commentary, and that is why we saw a bit of an increase coming in after there was no major commentary that came in from him in terms of that. He only said that the economy is quite flexible in the US and dynamic and subject at times of unpredictable shocks such as the global financial crisis or the pandemic as well, and at those times the forecasters have to think outside the models. That's the word that has come in from him. Other than that, let's move on, talk about what the Federal Reserve Bank's Philadelphia President Harker actually had to say. He reiterated his statement that the policymakers should continue to hold the interest rate, stay steady and wait for the already taken price hikes to actually work out for the economy as well. Moving on, the next commentary we have that is actually coming from Federal Reserve Vice Chair Philip Jefferson, who suggested that policymakers should actually need to respond to the forcefully increasing inflation that they've seen coming in. The expectations, if they rise further, then they may have to furthermore take a price hike as well, rate hike as well, and that is one concern that is shaping up coming in from the commentary from him. Lastly, we have commentary that is coming from ECB's Najal, who's highlighting that the last mile in terms of inflation might be the hardest for one to fight, because yes, European Central Bank's quest to restore the price stability may lie ahead after the inflation has slowed down, but yes, keeping an eye out on that. That's the last leg to fight the inflation is going to be the hardest.
Thanks very much, Vinny, for summing all of that up for us. And let's move right on then and welcome on board our technical guests as well, who, surprise, surprise, are both with us in the studio. This definitely calls for celebration. Naresh Mirani right here with us in our studios, and of course, Kunal Bothra joining in as always. So, season's greetings, happy Diwali in advance to both of you. And clearly this calls for a celebration, Naresh, the fact that you're here. Nikunj, have you planned some...
Breakfast is
Rasgullas.
Yeah.
No, breakfast is what he's carrying for all of us.
He's carrying for us.
Right? Am I wrong or right?
I'll have to order now.
Zomato, abhi to baat kar rahe the.
Okay, now
A tomato dish on Zomato.
Okay, so he's confessed on air, so we're definitely getting some treats. But for the markets, it's not been too bad. Kunal, what do you make of the setup?
I think it's a good setup for the markets. Last 6-7 days, almost a 600 to 800 point recovery on the Nifty. We've back about that 90,200 mark, which had been a touch and go zone for the index in terms of major resistance. Now, what I like about the setup over the markets, of course, one is that the market breadth has been quite vibrant, where you've seen the mid caps and small caps specifically do pretty well for themselves. Many of the mid caps and small cap, even the indices as well as the stocks, have managed to recover and hit back their June-July highs for themselves and cross above those levels. But then on the index setup, the last 4 days, we've seen a steady decrease in open interest. So now we can probably attribute that the short covering stance, which started off start of this week or end of the previous week, I think has seen a carry forward move. That could be a good sign. We've seen a reduction of almost, I think, 9 lakhs to 10 lakhs contract on the index futures on the Nifty specifically. So I think that's a good sign emerging, and this could probably indicate that the more we see a short covering stance from traders, we could probably expect that the pace of rally on the index would continue to be stronger and higher.
Naresh, hi, morning. Last year belonged to small and mid caps. Could large caps do the trick now?
So that's the toughest call right now. So the view currently is the large caps have a problem in terms of heavyweight. So I would expect the heavyweights would have a tough time, but if you remove out the first 4 top weights, we could still have a good large cap here, but not necessarily the top ones, because what we've seen generally in heavyweights, when they tend to get into a sideways zone, it can last much longer than we think so. And that is where Reliance, HDFC, the whole of IT and some more names are there. And if we look at the small cap and the mid cap indices, the outperformance has been slow and steady. So we've hit a new high on the Nifty small cap 100. We are just 1.5% away from a all-time high on BSE small cap. So overall seems like a more selective market, unless and until we see some of the heavyweights change trends. As of now, does not look like it.
So what is your stock list looking like? Mid and small caps or heavyweights there?
I think tilting towards mid caps and the performing names. Real estate has been doing exceptionally well in this last 6-8 days of rally. So I'm picking up DLF in that stance. The stock heading towards a breakout of the 600 mark. Excellent volume for the stock price, for the stock in the last 5-6 days, as well as the setup for the entire sector is also quite strong. So would suggest a buy on DLF, targets of 630, stop loss at 585. And GMDC was another candidate of a very strong reversal yesterday. It's a very high beta name. The stock, I think, had corrected more than 15 to 18% in the last 1 month. It's now made a very strong comeback, broken past about 350 levels. So would be a candidate of a further move on the upside. 388 as a target immediately, and stop loss to be kept at 339.
All right, Naresh, let's find out what makes it to your list today.
So first is a buy on IndusInd Bank. The stock has consolidated for a long time around that 1470 mark. Almost 6 to 10 attempts over the last 3-4 months. Finally above that 1470, 1480 mark. A new 52-week high, and over a period of time it has underperformed the banking index. Pre-COVID, the stock in December of 2019 used to be 1600, 1650. So I would expect a move back towards those levels. Stop loss to be kept at 1450. Second is a buy on Dr. Reddy's. We've seen a strong move across the whole pharma pack in the last few sessions. Dr. Reddy's is something which has slowly drifted lower after making a good move between May to August. And now finally the stock seems to have made a short-term bottom. A good reversal in the last 3 sessions. I would actually expect this flag breakout to happen going forward. So coming up with an initial target price of 5,700, stop loss at 5,380.
Nikunj, you were just talking about as to how it's perhaps time to tread with caution when it comes to small and mid caps, and they've had their time in the sun. Here's Ramdev Agarwal giving us a very interesting analogy, something to do with yoga and mid and small caps. Listen in.
देखिए 10 साल के बाद मेरे मालूम है मिड स्मॉल एंड लार्ज ऑल थ्री विल डिलीवर द सेम नंबर. आप लास्ट 15 साल का कर लो 9%, 10%, 8%. I'll tell you exact number. 15 years return, 8% index, 9% index, 10% for mid cap, and 8% again for small cap. This is a 15-year number. Go and check. But last 6 months, 1 year, is mind blowing. I mean, like index has done 8%, mid and small have done 20%. So that excitement brings all the crowd into following. In fact, after 20% return, you should run from there and go to the large cap. Because large cap is going to do that next 20%. Not this. See, अनुलोम विलोम होता है ना, तो पहले आप इसके ऊपर can you breathe further? You have to first release.
Breathe out, yes.
So now mid cap and small cap had their breathing up. Now they have to breathe down. Large cap had done their breathing down. They have to breathe up. अब लेकिन बोलने में बहुत easy लगता है हमको, लेकिन करने का जो है ना shifting the allocation there or sitting there is tough. So people who have patience, they will reap the benefits.
You know, that's a very interesting point that you made. You are feeling that froth in the mid and small caps, and I only ask because, you know, every day there is a new IPO. The market is broadening.
Yes.
You know, the small and mid cap space itself is getting so bloated.
Yes.
There are newer opportunities every day. So why would you say that this is the peak of mid and small caps
I'm
in the
not,
near
I am,
term?
you
In the
said.
near term?
I didn't say it is peak of mid and small cap. Who said that? There will be huge opportunity. It's of 3,000 companies, 4,000. If there are 3,000 companies listed, only 250 are the large cap. I mean, 100, 150 are large cap. Rest all तो आपका पूरा game ही mid and small का है. So the opportunity is very large.
Sure.
But when you say that the return from the category is 20-25%, then you know buying at those level you have to
Obviously,
be very you need more
cautious,
care.
yes.
Because generally valuations are high in that segment, and generally valuations are cheaper here.
Okay, and you can catch that entire conversation firstly at 10 a.m., a snippet of that, and then of course we'll play snippets of from that conversation throughout the day. But let's talk stocks and tell you what's going to be on everyone's radar this morning. Samit is here to highlight exactly that. And Samit, start off with Pidilite first. I mean, more than the numbers, which are below estimates on all counts, there's a very interesting diversification that they're making. I'm not sure how the market is going to read into that.
Well, one thing that stood out actually in Pidilite numbers was the margin. In fact, the gross and EBITDA margins were strong and they were at the highest level in the last 10 quarters and aided by moderation in the input cost. But yes, as you were mentioning, that the key concern that the street would be watching out for would be on the foray into lending business. Now, what they are saying that they will be acquiring Pargro Investment, which is an NBFC belonging to the promoter group company. Now, this acquisition value is very small, just 10 crore rupees, and they intend to invest close to 100 crore rupees over the next 2 years via equity and debt into this investment. But the issue here is that the company is foraying into a different business, which is not the current line of business or something that they have expertise in. So there could be some investor concern regarding this, and the amount that they're investing is not much actually. If you see, just 2% of their EBITDA, so not on that financial impact would be very less, but it's just that they're investing into they're getting into the intent to get into a company which is completely different is something that could be concerning for the street. However, there are some analysts which also believe that this could actually help the company to deepen tie with their intermediaries, which is the most important part when it comes to Pidilite like a business. You need to have a connection with your intermediary, and this would give them that connection. So that is what one part of the street believes, but then again, there are some
naysayers also.
See, Aisha, what has Pidilite done? I mean, they've mastered the art of allocating the right capital. The reason why Pidilite has traded at this kind of a premium is because markets have applauded, they've saluted their ability to do the right capital allocation. So every year the free cash flow what they would be generating, they've incubated a new business. So from Fevicol you've added a roof leak proof business, then you've come back into the tiling business. So what you've done essentially, you've really created a cohort of businesses which are a natural extension of your ability in terms of what the core line of business is. Any kind of a diversification, was it needed? If it was not needed, when a stock is expensive, markets would say that, okay, we've given you this P multiple for stability, for visibility, and for decent growth, where you incubated new lines of businesses on your own balance sheet. This is diversification. This is the business which they don't understand, because the lending business is very different from what they do in terms of the current, specialty chemical business or a FMCG business, which is backed by a brand. So yeah, it's a cash-rich balance sheet, but the reason why it's a cash-rich balance sheet is because they've been very smart with their capital allocation over the years now. Look at the track record. I mean, from the business which had Fevicol, they incubated Quick Fix, and from there they've got Mixed Fix It, and they've got just about every business which is in the same area of business. So while the management will have their own justification, of course there isn't justification. I mean, the management has a track record where they've not destroyed wealth, but markets would say that, okay, what if? And when the what if comes for a stock which is at 50, 60, 70 times, depending on the estimates you look at, then that what if in a sense tends to have an impact in the near term. So P multiple will not expand now, and P multiple may just contract in the short term.
Okay, and the other stock being Lupin, again, margins at a multi-quarter high. What should the street take away from an already well-performing stock?
Well, the trend in pharma stocks continue. Even Lupin has outperformed margins at multi-quarter high. US generic sales have grown nearly 18% on a sequential basis, and this was driven by Spiriva sales and market share gains when it comes to Prezidsa drug. The India formulation business, which forms nearly 34% of the sales, that grew around 7% on a YY basis. EMEA, which contributed around 10% to the sales, grew around 24%, while the growth market sales, which contributed around 9% to the revenue, degrew around 2% on a YY basis. Now, gross margins came in at around 66.2% from a margin of around 63.8% in the previous quarter. So this clearly shows that there is some pricing strength, and raw material prices have come down for Lupin in the second quarter. And this has also flowed through to the EBITDA level, and that margins have grown by nearly 4 percentage points on a sequential basis. Obviously, there was this gross margin benefit, and then there is some operating leverage benefit also that came in for Lupin in the second quarter. Apart from that, the company has secured nearly 11 ANDA approvals in the second quarter, which takes that total ANDA approvals to close to 444 drug approvals that they currently have. So strong set of numbers. Growth outlook continues to remain strong as per analysts, but we'll have to watch out for what the company says in the Q2 call.
Let's look at the stock, and it's just, we don't talk about Lupin that much because it has just fallen off the radar after years and years of underperformance. Look at the stock, and the YTD change or the 1 year change for Lupin is nothing short of extraordinary. I think it's breathtaking. Now, markets knew this was coming, and these kind of numbers is something which markets have endorsed. I have seen over the years that when a pharma cycle, when the uptick starts, it's going to be at least a 4 to 5 quarter uptick or 5 to 6 quarter uptick. I think for Lupin, Somit, it's just been 2 quarters in terms of where they managed to beat the estimates. And I think the cycle, the way it has moved historically, what I've analyzed, I think it's going to be a multi-quarter cycle. So I think we are in for more positive surprises. The stock is not very expensive. The stock is now, markets have realized that, look, the pharma business is not a structural business, it's a cyclical business. It's important to associate with the cycle. If they are able to get their, compliance necessary approvals in Nagpur 1 and Mandeep, then I think there is a re-rating case in the short term. But I think the business in general is in a sweet spot. Some of the most famous investors of Lupin, including late Rakesh Jhunwala, they've also thrown in the towel and they've also exited the company. So that is the kind of positioning which is there in the stock now, that even though the stock is run up, it's just not there with any large institutional investors. So I think under ownership, delivery, cycle, trigger of Mandeep and Nagpur, these are factors which may just keep the rally or the momentum strong in Lupin in the near term.
Mandeep.
Yeah.
We will take a very quick break on that note. Soumya, thanks as always for highlighting the 2 stocks to look out for. That's Pidilite as well as Lupin. Keep those on your radar. Quick break. When we come back, we'll have our fundamental experts as well join in on the show.
Welcome back. Still tuned into the market. Sanjeev Bhasin joining in on the show. Sanjeev, hi there. Good to have you. Clearly, festivities all around as we're kickstarting the Diwali season. So, take us through what the top Diwali stock idea is then, the Dhamaka bet.
Good morning, Awan. Wishing you and all your viewers upcoming very, very happy Diwali. What a week. 7 straight days of Dow gains. Nasdaq doesn't relent. It's 8 days of straight gains, first time in 2 years. Crude at 4-month lows, bond yields at 3-month lows. All the makings for India to outperform. It's about time the elephants start to dance, but take it with a pinch of salt. I think 19,700, like I told you, is very much on the cards. Diwali or maybe a day or so prior to that. Results have been very, very smart. My top pick for Diwali is Idea, and I've been constantly saying if this stock is seeing re-rating, 33% of Idea is owned by Government of India into equity. It has never defaulted on a bank loan. ARPUs are rising. Their attrition rate is falling, and their 5G is getting momentum. Just today, you read a tax arrears or a tax refund is of 1,800 crore with interest is back, and I think the AGR pricing will be another positive. So from this Diwali to next, Idea at 11 or 12 can give you 22 to 24 rupees. That would be my top bet. Second would be Tata Power. I think Tata Power numbers as a discom are very, very splendid. You have to take two things into account. Margins are the highest in 16 quarters. And they had to make some adjustments for their Odisha discom, which they acquired and which is still partly loss-making. But the positive is the advent of the EV stations, which they are increasing by each quarter. So if I have to put my money, it would be Tata Power and Idea for this Diwali to next.
Okay, Tata Power and Vodafone Idea, those are the stocks that make the cut for the Diwali Dhamaka recommendations. But it's interesting that we were talking about the entire pharma space, Sanjeev, and just looking at the kind of returns that you've seen within this space. Do you believe that it's going to be a case of select stocks that stand out within the entire pharma space? Which would those be? Or do you think that we're going to see an entire sectoral move?
Yeah, so I think the whole sector has moved, and particularly the mid caps. I mean, look at Lupin's numbers. As a disclosure, Lupin is in our portfolio. We suffered a lot when it underperformed, but from that 780, 800 levels, we started accumulating. When we got positive commentary from the management that the worst in generic pricing is over, you must realize Lupin has a huge overseas reach, and once the US market starts to perform, they will be one of the biggest beneficiaries. I still think Lupin is headed much higher, but Avan, if you wanted to participate in pharma, I still recommend go for 2 mid caps, go for 2 mutual funds which have a pharma thematic scheme, that is SBI and Nippon. They're both fund managers are very, very very apt in deciding the portfolio, and it is better to buy a basket now than individually, because select stocks have been outperformers and you want to participate in the whole basket. As a disclosure, Lupin and Aurobindo are 2 which we have accumulated. We still think that there is upside in both those stocks.
Okay, that's quite an interesting idea coming in there. But Sanjeev, can't help talk about Pidilite. I mean, not just the earnings, the fact that they were sub-market expectations on most counts, barring, of course, the gross EBITDA margins, which are the highest in about 10 quarters. But this foray into lending business, I don't know if you've delved deeper into that. What are you making of this diversification?
So, I think the net outflow from the numbers I read will be something like 10 or 15 crores, which is not that big for a company of its size and the way it's growing. Pidilite has been a very, very big performer in the FMCG space. It's a slow and steady business. It has a huge market share where there is arguably hardly any competition. But, generally, people will look for, the naysayers will look for some excuse on that. I would look out for more commentary from the management as to why they had to do this, because that money could actually go in aiding their capex on a larger scale. And since we think that the business outlook for FMCG is going to be much more faster or much more better in the next half, given that the crude correction and other variables, we think that once we get more language from the management, we will. But we continue to have Godrej, Consumer, and Marico as our top picks.
Okay, that's the take coming on in Pidilite. And of course, Godrej Marico is what Sanjeev is betting on from within the FMCG pack. But Kunal, two stocks that, Sanjeev flagged off. A, Idea, Vodafone that is, and the other one, Tata Power. What are the charts indicating?
Yeah, so I think we are now into a zone, of course, where many of these mid-cap names are mid-cap, small-cap names are doing pretty well for themselves. Vodafone Idea also, I think, on the short-term charts, has managed to give some sort of a breakout. The major level of a breakout, I think, is still at 17.5 levels. And we discussed this some time back, that's a major zone where the stock took a resistance, I think, almost 6-8 months back, and from there on the stock had seen a sharp correction back towards 10.5 to 11 odd mark. So I think that's one important resistance to be taken out for Vodafone Idea. Hopefully in this leg of uptrend, we could probably expect that the stock may come back to those levels, but that's a point to look out for. Tata Power, I think, has been an exceptional mover. So I remember, I think the stock was almost at 60 odd rupees from the 2020 lows. Had come very close to breaking the 300 mark in 2021-22, and from there on the stock went into a time-wise consolidation. The stock had retraced back towards 200 or sub 200 levels. Now it's trying to meander on the 250 odd mark, which means that both in terms of the price rally, the time-wise correction, I think all of that has happened for Tata Power. I think it's a classical stock to have in one's portfolio. I would believe that even from current levels, I would expect the stock to not just retest the previous highs of 300 odd, but even scale past beyond those levels. The only concern is in terms of time frame. So I believe if someone has a time frame of at least a couple of years, then I believe a significant 20% to 30% upside could be seen into the stock.
Okay, let's just pause for a bit and let's hear out another market voice. And we've been talking to big market voices all through this Diwali week, and amongst many names that we also caught up, we chatted with Samir Arora from Helios Capital, and we quizzed him about Zomato and other food aggregators. Let's hear out an excerpt of his chat with Nikunj.
Samir, you have a big investment in Zomato. So I'm not getting into stock-specific conversation, but the logic here is that Indians are eating out, and Zomato is in oligopoly business. So the restaurateurs have a different story to say, that Zomato is hurting our business.
I was not saying they're eating out, but पहले आप बोलो फिर मैं बताऊंगा.
नहीं देखिए ऐसा है, I personally believe that e-commerce per se is a great space to be in, because that is something that can really accelerate the growth of rate of growth. Problem is the current ecosystem that has emerged within the food service sector, aggregation, is very unhealthy. It is all driven by what I call the three problematic Ds. That is, discount, discovery, and the delivery price. They take away virtually 40% of your revenue. With that kind of revenue going into them, another 35% in your cost of goods and packaging, you're left with nothing. So this does not impact a large format restaurant, which is more about dining in. But at the lower end of the spectrum, where you are talking about QSRs and cloud kitchens, it is actually counterproductive, the growth of Zomato and Swiggy. So I believe we need them, but we need them with fresher terms of engagement, fresher narrative. Today, if you look at Nikunj, the narrative is discount is the only way to get a customer, retain a customer, and re-engage with customer. I think that narrative needs to change somewhere.
So I would have agreed with him if I saw that Zomato is making a lot of money. ये सब करने के बाद Zomato is making like 100 crore.
Zomato stock has made a lot of money for unit.
The stock has made money, but the company has
मैंने अच्छे टाइम पे ले लिया, but I'm saying the company is not making money. तो ये सब सर्विस अभी वो फ्री के लिए कर रहे हैं for restaurants.
But do you like this?
So my logic was different. My logic was
which is why you bought Zomato.
नहीं, I mean as a concept now, even then maybe, but now that there were so many these QSR guys. And now Zomato has democratized that कि आपको ये 4-5 चेन में जाने की क्या जरूरत है, हमारे पास 100 variations हैं, and that same purchase has been divided into so many guys. तो इसलिए the QSR guys are growing nothing, and the Zomato delivery is going whatever 20-30% per annum. Second thing is that traffic is too much. So for people to go to a restaurant, come back, 2 घंटे आपके एक्स्ट्रा जाएंगे.
पार्किंग अलग लगती है.
उसमें आप Netflix में मूवी देख सकते हो, खाना घर आ जाएगा.
पार्किंग चार्ज अलग है. You're forgetting the parking
मुझे लगता है कि
and service charge is restaurant charge. You don't talk about it.
लोग convenience fee तो वो भी ले लेते हैं आजकल.
तो वो टाइम के बदले पैसे ले रहा है आपसे.
मैं वही बोला, उनका एक्चुअली देखोगे, जैसे मैंने 3D बोला ना, उनका एक 3C है, which is positive Cs, which is convenience, choice, comfort, बहुत सारी चीजें हैं, पर वो उसकी बात नहीं
तो
करते।
ये क्या होगा फिर?
हैं?
आपने COD बता दिया, A और B भी बता दो मेरे को।
ए और भी कुछ नहीं, हमें जिंदा रहने दो, और क्या? अब बस करो।
Lots of interesting chat and conversation there, Sanjeev. Clearly, the QSR space, the hospitality space, the restaurant space, as you have flagged off time and again, seems to be in a sweet spot. What's looking good from a stock market perspective?
Well, Zomato is hitting new highs. I still like Devyani International. I think their EBIT came lower because of their branch expansion. Paytm and PB Fintech are two more names which we own, and we still think there is miles to go in this place. So Devyani International would be my topic in the QSR space. I think the brand and the positivity on the momentum which they have, particularly the market share they are gaining on Costa Coffee and the veg meals available with Kentucky Fried are doing extremely well. Their branch expansion has seen a little bit of it on the EBIT, but I think that will start to turn positive in the next 2 quarters.
You know, the interesting bit we got yesterday when we spoke to a few restaurateurs, and you see they were part of the show, is that the food delivery changed the QSR business. And you look at the profitability of some of the QSR companies. Look at the change in Zomato. It's been an exceptionally strong year for Zomato, but the QSR companies, including names like Jubilant Foodworks, they are going through a stress test, if I may speak, because the commissions which they have to shell out with Zomato, and Sanjeev Bhasin would vouch me because his son runs a restaurant here, I think is quite extraordinary. So whether it is Devyani or whether it is Jubilant Foodwork is not in QSR, it's more like food delivery. But the QSR space per se, in a sense, is now feeling the heat of high operating profit margin, higher rentals, and also the commissions which they have to really share with the food delivery app. Bhasin Saab, you are nodding. I don't know if that nodding is an indication that restaurants have to give a lot to food delivery, or that indication is a warning that food delivery companies, we will not give you that much now. So was that a proprietor or was that an investor who was nodding?
No, it's also a part proprietor, part investor. Luckily, Zomato was the first find I did. My son is not making much money, but Zomato, when I discovered the whole line of what Zomato was eating out, then I realized that Zomato is a win-win stock. But Nikunj, you have to take it with a pedigree that there is enough space to eat. You won't believe the seasonal effect plays out brilliantly. People still want that effect of going to restaurants. They are the compulsive Punjabis who want to go and eat where they want. And the Cricket World Cup has added because you want to watch your matches. And like I said, there is enough room for growth over here. You are right that margins will be hit because of the delivery side. But I think there is still room for expansion, given that millennial eating has picked up like how. You have no staff at home. It is all about ordering 4 times for 4 people in different ways and different meals. So that means volumes are going to make up for the slight bit of margin loss, but win-win for the distribution companies.
All right, no tomato, no Zomato. We've discussed that. The year gone by, well, it belonged to tomatoes more, less of Zomato, both in terms of price tag. But one stock which stood out, and Kunal is very happy every time I talk about it. कौन सा है पता है?
Tata Motors.
क्या बात है, क्या बात है, क्या बात है. हाँ जी.
Yeah, so it still looks very attractive, Nikunj, to me. I would still believe that the juice is not out of Tata Motors yet. I still believe that the stock from in this year. Yeah, but I think it's just that this year people have started to have more confidence on Tata Motors. Earlier I think it was M&M which used to do pretty well over the last 2 or 3 years, and that's a stock which had done pretty well. There were phases where Bajaj Auto, Hero MotoCorp, Eicher Motors I think did pretty well, but then these stocks have broadly I would say underperformed as such over the last 1 to 2 years when you look at the net returns for these names. It's just that Tata Motors has been one of the stronger performers. I think now Maruti is also emerging as a strong breakout candidate. So I would be bullish on few of the select auto names. It's not that the entire basket is also doing pretty well, but there are few pockets with the auto stocks which are looking strong in terms of momentum, like Tata Motors and M&M, and there are few emerging names like Maruti which are also looking very attractive.
All right, that's Tata Motors, the favorite. And on that note, Sanjeev, I want to take time out to thank you. Good to have you as always, sharing your stock ideas. Hemang Jani is also now joining in on the show. Hemang, but before I come to you, so Naresh, you very well know Kunal's top recommendations. Kunal, what about you? Do you know what Naresh's favorites are? I think I can guess. Maybe it's like an NTPC, IndusInd Bank. You want to hazard a guess, Kunal?
Yeah, and maybe add to it Power Grid.
Power Grid. I think every week we definitely hear those names. Are we right, Naresh?
Yeah, so I've been a bull on the whole public sector enterprises, and luckily that's been the good sector to be in the last 1.5 year. Does not go down much with the markets and slowly and steadily makes a new high. So a defensive bet which has made aggressive moves. So if you were to look at the CPSE index over the last 1 year, it would surprise that it is one of the best performing ones from Diwali to Diwali from the last 1.5, 2 years. And there is a big change happening which is not accepted or say expected in the whole sector is. For the last 10 years, we saw public sector enterprises being only bought by LIC, OFS, etc. But if you were to look at shareholdings today, 32% of Power Grid is owned by FIIs. You can look at HAL from 15% LIC to almost 2-3% of LIC left. So it's a sector which continues to see inflows also even when the FIIs have been selling.
Okay, let's get in Hemang Jani's views as well. And Hemang, good morning. We're just marking out the Samvat to Samvat gainers, and on the Nifty, Tata Motors, which Kunal flagged off, 61% has been the gain. L&T has gained about 55%. Bajaj Auto has done very well. ONGC and Naresh's favorite NTPC have also made it to the list with a 42% gain. What do you believe is going to be the next strong bet within the large caps from this Samvat to the next?
Yeah, good morning, Awan. I think, when we look at last year, clearly the mid caps and small caps were the winners. And yes, we may have certain outliers in the large cap like Tata Motor and a few auto names. But the fact of the matter is that the real action has happened in the broader market. So I think going forward, if you were to take a 12-month view, I do think that you may see a little bit of a catch-up when it comes to large caps. But in terms of big action, again, it's going to be the mid cap and the small cap category. When it comes to themes, I think one theme which is clearly emerging is the NBFCs, where the lending is happening with some collaterals, because we've seen some stress come through when it comes to unsecured lending. So I think some of the housing finance companies, something like LIC Housing, a Five-Star Finance, and that entire rural focused companies like Mahindra Finance, Shriram Transport. I think these are the names where you would see a shift happen from the by the investors from unsecured lending. I think so. This could be one interesting space to watch out for when it comes to next year.
Aman, my limited point is that today, we may just be saying, okay, you add the word, you add the prefix PSU or you add the suffix PSU. That stock is done well. I mean, I have no folks who bought that, okay, what should we buy in the PSU space? Doesn't matter whether it's a power company or a defense company or a bank or whether it is into even, railways. As long as it had PSU, as long as it has, Government of India holding, those stocks in 2023 or this Samvat year gone by, I think have done exceedingly well. Look at it. I mean, a fertilizer company, hello, 5 times. RVNL, not the really greatest of the business in terms of creating shareholder, in terms of return ratios. IRFC, REC, Mazgaon Dock. While there is a lot which has changed in the PSU space, and a lot of wealth has got created. And this is absolutely in recognition of what the potential of some of these future businesses which are driven by government capex and government drive to really create value via the PSU space, I think is extraordinary. So some of the mid-cap gainers are from the PSU space. But next 6 to 8 months, Hemang Jani, it could be that election vacuum. Decision making may come to a stall. The central election cycle could be at play. So let's say starting from April till May end or April to June end, you may actually see a delay in decision making. Orders will not come out. Big projects may not be awarded. Everything in a sense because of the cycle may just be on a back burner. So what happens then?
So Nikunj, if you recall, last general elections, before the election period. In fact, some of the PSU names actually started doing pretty well. This was across, whether it's OMCs, Power, and whole host of companies. So the stock market movement is not necessarily driven by the order inflow or what kind of performance do they deliver, but it's more driven by what kind of government would come in and post that, what kind of reforms or expectations built up which is around that. So it's more of a sentiment driven thing. So I think having seen a very strong up move across PSUs, I do think that valuations performance is, somewhere there needs to be a bit of a stability there. So I would not want to chase that. I think you have whole host of companies outside PSUs, both in the large cap and the mid cap space, where I would be more comfortable getting into, because this result season has been so great, Nikunj, where you've seen a little bit of okay-ish top line growth, but whole host of companies have delivered margin surprise, and that has come as a big positive surprise for all of us.
Okay. Now the small cap versus mid cap versus large cap. It's not unusual, right? I mean, it could be small cap this year, it could be mid cap next year, but next year I think it could be large cap. Now that's how somewhat to somewhat dollar returns have been. And if one looks at the very interesting data that in the Indian indices, the real estate index, I mean, thank you DLF, right? Real estate, thank you DLF. 50% up is only DLF, right? I mean, the magic of DLF heavyweight, I mean, what is the real estate component? Do you have it with you?
No, I don't have it.
Okay, I think DLF would be a large one. You have it with you. You've done some work on it. I remember a tweet that you've done some work on real estate.
So I think it is more than 30-40%. 35% roughly is DLF itself.
एक ही stock है. Actually, yeah, just think about it. I mean, one stock goes up 100%, 60%, the index will just look very different. But what is interesting actually this year is the list of billionaires. And you would imagine that, okay, the traditional billionaires in a year like this, what have they done? And when I say traditional billionaires, the big billionaires of India. Ambani family, Adani Group, the Jindal Group. What has happened to individuals in terms of the wealth which got created? So a bit of a snakes and ladder moment here. Who's gone up, who's gone down. Now for Adani Group, it was first a snake and then a ladder. The market cap of Adani Group plummeted. And it plummeted how? RKD, which is Radhakishan Damani, market popularly like to call him Bhai Sahab. And his wealth also, given that where the stock of DMart, I beg your pardon, went down, it saw a dip of 15%. And then you had Azim Premji. Even though he's put a lot of stock out for charity, it changed. So from peak to peak, from the peak, Adani's wealth was $150 billion. From Samvat to peak, it went by $138 billion, and now it's at about 61. So it's been a year which, in a sense, was a year of peak and turfs and twists and turns, at least for Gautam Adani. Now let's look at Mukesh Ambani. It was not a great year in terms of wealth creation. And this can easily be captured in the way the net worth of Mukesh Ambani moved. It was up just 1%. And this also includes the wealth which came because of Jio Financial listing. But interestingly, Rekha Jhunjhunwala last year, or this year, the wife of late Rakesh Jhunjhunwala, became the second richest women billionaire in India. And there you go. Rekha Jhunjhunwala right in the end. And her wealth, I think we need to interchange a picture there. I think we have to interchange the picture. That's not Rekha Jhunjhunwala in the center. She has to move towards the right. Rekha Jhunjhunwala enters the list of billionaire. And as per reported data, her net worth is $7.2 billion. It's been a very thanda year for Reliance, right, Kunal? Thanda year.
Yeah, so very tepid year for Reliance, HDFC Bank. And I think, as you rightly pointed out, that there was a phase where these mid caps and small caps do pretty well, and large cap stocks have underperformed. Grossly, I think large cap stocks have remained to be huge underperformers in the last 1 to 2 years. In fact, even if you do a price comparison between 2021 highs for these stocks to where they are right now, I think more or less we've just seen a single-digit maybe price gain for many of these heavy-weighted large cap names. So I would probably expect that this is a phase of the markets where we've seen such kind of names like Kotak Bank, HDFC Bank, etc., behave like this. It's not going to be too long that these stocks would start to get into a strong zone of outperformance. We've seen many a times Reliance specifically heading towards that 2600 mark. I think just prior to that Jio financial demerger, I think from there the stock had started to show signs of some sort of recovery as well as inching towards a breakout of that 2600 mark. Hopefully the next time the stock meets up back again those levels, I would believe we could probably be getting Reliance into a breakout zone.
Duresh, Reliance?
So absolutely no view on the stock currently because the trend has been sideways for long. And the problem is we've seen this is not the first time it has happened with Reliance. And no point preempting it. We've seen a period of 2010 to 2017 also where it remained sideways. And now if you were to remove the geofinance part, that's the only return which is there. And the stock is back to 2300, which is where it topped out in September 20 when the whole fundraising spree was done. So out here, 3 years, barely any returns into the stock. How long does it continue? Tough to say. But once we start seeing, say, a move beyond 2550, 2600, that's the time I would start looking back at it. But sideways periods can get longer than we expect. So as of now, no real view.
You want to comment on Reliance, Hemang?
Nikunj, typically you go through a certain phase that some of these large cap companies are going through, be it HDFC Bank, Reliance, and maybe to some extent Bajaj Finance kind of companies. But the fact is that when you look at Reliance, the two businesses, the Jio and the retail, they continue to deliver. So I think the moment you see some sort of action in those categories with some sort of impending demerger etc., there is going to be a lot of excitement. So yes, those momentum players, they may not want to get in at this stage, but if you are an investor, then this is probably the time to get into Reliance because of the risk reward being so favorable.
2337, it's just been a flat year, and it's been a flat year for the bank nifty also, honestly. Just a flat year. The index which was supposed to hit out of the park, it's just been a flat year for even the bank nifty. It's been a bad year for IT. It's just been a bad year for IT. Again, FY20 January, nobody thought what could be the positioning. Now my sense is that same time next year, a lot of the stuff what we're discussing today actually would be different. I think banks will make a comeback. I think IT may just be into a prolonged, painful, protraction period for some more time. I think somewhere the mid and the small cap stocks outperformance will get challenged. So what we are looking at the setting on the table right now, trust me, in next 1 year or next 18 months, the setting on the table has to change, which is very, very important. That's the mid-cap index for you, followed by the small-cap index and what the bank nifty has done. So Kunal, what's the trade for the bank nifty today?
Well, I would not be, I would not say bullish on the bank nifty for an intraday basis, but I would actually wait out for intraday correction. So what you've seen as a pattern over the last 2-3 days is that there are intraday dips for the bank nifty. There are some 250-300 points intraday corrections which happen into the banking index, and I think that becomes actually a good opportunity to initiate a fresh buy for the banking index. I think on the short term basis, for example, 43,400, 450 could actually act as a good, because on spot levels, could actually act as a good entry point for banking or bank nifty traders. So I would wait out for that intraday 100 point to 50 point odd dip for the bank nifty to initiate a fresh buy.
Okay, let's get in some mid-cap trading ideas as well on that note. Naresh, what's on your list?
So that would be a buy on CESC. We are seeing a good trend across power names. So CESC is coming back to almost a 1.5 2-year high. Last few months it has been in the range of 83 to 93. So a bigger breakout comes in the stock about 93 levels. Good price action yesterday, preempting the possible breakout going forward. A target price of 110, stop loss at 87.
All right, Kunal, let's find out what's on your mid-cap radar.
So Dixon Index is something which looks attractive. The stock is back again above the 50 DMA as well as heading towards a breakout. It's a minor breakout because of the hourly chart time frame for the stock. But again, expecting the 200 point up move for Dixon, targets of 55.50, stop loss at 52.50.
Let's move right on then, and here are some of the other top headlines that we're tracking. Amazon has begun cutting jobs in its music division in the latest round of layoffs. Over the last 1 year, the job cuts have impacted 27,000 employees of the retail giant, and the impact of the layoffs still remains unknown. Meantime, to the update on the war that's going on, thousands of Palestinians have fled North Gaza as Israel has only intensified its ground assault, bombarding residential areas in a bid to tighten the stranglehold, as they describe it, around Hamas. Meanwhile, G7 foreign ministers backed humanitarian pauses in Gaza, but refrained from calling a ceasefire in the war, which till now has seen over 10,000 casualties. Meantime, Delhiites continue to breathe toxic air. The national capital and its neighbouring areas have seen AQI hovering in the severe category. A slew of measures have been announced to combat pollution. Schools have been shut from today till the 18th of November. The government is banning the entry of non-Delhi registered commercial taxis booked via apps in the city, and may introduce and induce artificial rain in order to manage the rising pollution.
Also, in a surprise move, Australian legend and women team skipper Meg Lanning announced retirement from international cricket. She's the megastar who led Australia to a 7 World Cup victory and is hanging her boots after just 13 years of an international career. And ahead of widely celebrated festival of Diwali, British Prime Minister Rishi Sunak extended warm wishes to the Hindu community in the United Kingdom and around the world. Sunak and his wife Akshata Murthy hosted a special Diwali event at 10 Downing Street, lighting traditional diyas and meeting members from the Hindu community.
All right, let's get a move on. What's the khabar on D Street then? CCL Products, that's going to be in the spotlight. Some large inquiries, we understand, for its Continental brand. Let's get in Sharad, who joins in with all the khabar. Sharad.
Well, in focus, we are having CCL Products, and the company is one of the world's largest bulk exporters of coffee. And importantly, the buzz in the street is that international buyers are showing a lot of inquiries when it comes for the Continental brand going abroad. Now, the company may go global also with the launches expected. And also importantly, the D2C business is already there. However, it's in a smaller format and it's there in the domestic market. So an increase in inquiries from the global customers is what the buzz is coming in the streets. Now also the company is preparing a roadmap, especially for their Losbers brand, and also from FY25 they expect this to grow aggressively, especially on the branding front as well. Now branding for a coffee would be a high margin business and might be a value re-rating as for the analysts. Now incidentally, we did a ET Now channel check also last month, and that time also it was confirmed that a strong response was being seen from the international buyers as per the World Coffee Congress, which was held in Bengaluru in the month of October.
All right. Himang Jani, let's get some Diwali ideas going from you. I mean, one large cap, one mid cap, one small cap, and be specific in terms of large cap, mid cap, small cap, where you have, let's say I give you an option that you have only 3 chances. 3 stock. सोच समझ के.
Okay. So when it comes to the mid cap category, I like this capital market wealth related theme. So I certainly would go with 361, that IIFL Wealth. I think the way things are happening in terms of the wealth services, you are going to have about 3-4 bigger companies, and this being the largest, I think there is going to be a good amount of fee based revenue growth that is going to happen along with the AUM. So 361 is something that we like when it comes to the mid cap space. Small cap, I would suggest a high beta name. It's Bajaj Hindustan. I think sugar has been a theme for a while. And because of the past issues, the company today is putting it around 30-32 bucks. But the way things are going in terms of sugar pricing, the inventory, co-generation, ethanol related things, I think Bajaj Hindustan could be one to look at. Of course, it's a high beta company, so one should be a little careful about that. And when it comes to the large cap companies, I think we should go with Tata Motors. Nikunj, everything is going for this company, whether it is premium luxury space, EV, the transformation in terms of their SUV portfolio, margin guidance. So though the stock has been the best performing stock, that does not mean that next year the company will not deliver. I think this being a dark horse, a high beta name, I think I would go aggressively on Tata Motors.
Tata Motors, Bajaj Hindustan, and IFL Wealth. I mean, the new name is IFL 360. 10-year yields have fallen, crude is down, SGX is up, and Dhanteras is tomorrow. So looks like we are in for a very happy Diwali. New high on Diwali day?
I think post Diwali.
Just about there.
Just about there, yeah.
What, 600 points?
So, new high in terms of index is a formality, but new high in terms of stocks has already been seen. You look at the mid caps and small caps, I think, these kind of returns actually makes us go back to that month of May, June, July. I think that period where, these mid caps and small caps were doing exceptionally well. There was a lot of trading activity rather than more participation towards the index. Of course, when the index moves up higher, the sentiment and the confidence is pretty much high because, then you are happy holding on to large cap, mid cap odd names. But then, the real action in the last 6 odd days, 10 odd days is actually in the mid caps and small caps.
All right, there you have it. That's the view coming in. But let's also move right on then and focus in on Pidilite. And before we do that, Hemang, good to have you on the board. Thanks so much for joining in. So yes, Pidilite and Lupin, they will be in focus. Back of good earnings, strong margins. But what does it mean for them? Let's revisit Nikunj's take on these two stocks.
The reason why Pidilite has traded at this kind of a premium is because markets have applauded, they've saluted their ability to do the right capital allocation. So every year the free cash flow, what they would be generating, they've incubated a new business. So from Fevicol, you've added a roof leak-proof business, then you've come back into the tiling business. So what you've done essentially, you've really created a cohort of businesses which are a natural extension of your ability in terms of what the core line of business is. Any kind of a diversification, was it needed? If it was not needed, when a stock is expensive, markets would say that, okay, we've given you this P multiple for stability, for visibility, and for decent growth, where you incubated new lines of businesses on your own balance sheet. This is diversification. This is the business which they don't understand, because the lending business is very different from what they do in terms of the current, specialty chemical business or a FMCG business, which is backed by a brand. So yeah, it's a cash-rich balance sheet, but the reason why it's a cash-rich balance sheet is because they've been very smart with their capital allocation over the years now. Look at the track record. I mean, from the business which had Fevicol, they incubated Quick Fix, and from there they've got Mixed Fix It, and they've got just about every business which is in the same area of business. So while the management will have their own justification, of course there isn't justification. I mean, the management has a track record where they've not destroyed wealth, but markets would say that, okay, what if? And when the what if comes for a stock which is at 50, 60, 70 times, depending on the estimates you look at, then that what if in a sense tends to have an impact in the near term. So P multiple will not expand now, and P multiple may just contract in the short term.
Okay, and the other stock being Lupin, again, margins at a multi-quarter high. What should the street take away from an already well-performing stock?
Let's look at the stock, and it's just, we don't talk about Lupin that much because it has just fallen off the radar after years and years of underperformance. Look at the stock, and the YTD change or the 1 year change for Lupin is nothing short of extraordinary. I think it's breathtaking. Now, markets knew this was coming, and these kind of numbers is something which markets have endorsed. I have seen over the years that when a pharma cycle, when the uptick starts, it's going to be at least a 4 to 5 quarter uptick or 5 to 6 quarter uptick. I think for Lupin, Somit, it's just been 2 quarters in terms of where they managed to beat the estimates. And I think the cycle, the way it has moved historically, what I've analyzed, I think it's going to be a multi-quarter cycle. So I think we are in for more positive surprises. The stock is not very expensive. The stock is now, markets have realized that, look, the pharma business is not a structural business, it's a cyclical business. It's important to associate with the cycle. If they are able to get their, compliance necessary approvals in Nagpur 1 and Mandeep, then I think there is a re-rating case in the short term. But I think the business in general is in a sweet spot. Some of the most famous investors of Lupin, including late Rakesh Jhunwala, they've also thrown in the towel and they've also exited the company. So that is the kind of positioning which is there in the stock now, that even though the stock is run up, it's just not there with any large institutional investors. So I think under ownership, delivery, cycle, trigger of Mandeep and Nagpur, these are factors which may just keep the rally or the momentum strong in Lupin in the near term.
Okay, let's also tell you what the index strategies are this Thursday morning. And after some consolidation playing out yesterday, it's a hold and a consensus call from Kunal Bothra, from Naresh Mirani, as well as Kush Bora as well. So the Muro meter is pretty much right on the hold call. And I think it would be a similar picture for the Nifty Bank as well. It's a unanimous hold all through from three of our chartists. And the Muro meter at hold for the Nifty Bank strategy too.
So as you walk into trade this morning, crude is the story. It is the big story. Crude prices have plunged. I think plummeted is a better word, or plunged is a better word.
Dipped. It's still not comfortable for us. It's still around 80, a little tad below that.
See, the long-term average of crude is 55 to 75. So technically, crude should come down more in terms of the realization what has happened. And add back inflation, so 55 could become 65 to 75. That's where...
Hope that comes in.
Yeah. But
it seems like 70 to 80 could be the new normal. I mean, I don't know when it'll go back to 55 levels.
If it goes to 55, trust me, it'll be because of some bad news.
Yeah.
And that bad news is hit.
You don't want that.
You don't want that bad news.
So you much rather deal with 70 to 80.
When crude fell to, sub $20 during COVID, everyone said that, okay, this is an indicator of a huge slowdown in the world. See, the world has not become fossil-free, right? Yeah. We are still using crude. So if crude plummets, that means that there is some bad news coming from somewhere or leverage seems to be reversing. But for me, if I look at the story, there is a war and there was an impact. The reversal in crude, I think, is the single most important indicator of how world is perceiving the risk. Crude prices have gone to July levels, which means that they have gone back to levels which are pre-war. And that's what happens. Typically, when you have these geopolitical issues, when you have events, the asset classes, they tend to swing. And when the adjustment really gets over, a lot of time the adjustments is actually before the event levels or after or really above the event levels. For example, Indian markets, small cap index, Bitcoin, they've adjusted above the event. Crude has gone down. Dollar index has gone down. The only thing which is not adjusted, I think, is FI flows. So as you walk into trade this morning, yes, festivity. Yes, double cheer because markets have stabilized. Triple cheers because it's been a great year for small and mid-cap stocks. And it's been a year when you kept the faith, you made money. I think that is very important. You've created wealth actually. Money is not the right word. Wealth. Look at the breadth. Hello. 1:4. Advanced decline ratio, formidable in favor of advancing. A lot of green, you can ignore the index. Frankly, index has not been the real marker of the market this year. Now, we can get into this whole argument once again, tail is wagging the dog and that's never a healthy sign, but whatever may be the construct of the market is telling a very, very different story. BPCL, Adani Ports, ONGC, Reliance, Tata Motors, some of the stocks which are off to a good start. Pidilite, are things getting sticky for Pidilite? No. All of us thought that Pidilite and that new acquisition of Pidilite moving into the lending business, something markets may not like. But who can challenge the wisdom of the market? I thought like this, brokerages are writing like this. Somit and me were discussing in the morning, but markets are markets. They can continue to surprise you. Lupin, good numbers, impact may not be that large. And then Tata Motors, largely mixed actually. Tata Power has so many moving parts that you cannot take a month-on-month call, quarter-on-quarter call on Tata Motors, Tata Power. But from a market standpoint, it's not a number which is really getting rewarded or punished per se.
Let's first address the bad news. Bata numbers, while the Q2 has been largely below estimates, the net profits have actually seen a decline of 38%, but the market is willing to shrug that off. The stock is holding up higher. For BHEL as well, the EBITDA loss is only expanded and there's been a revenue decline of also about 1.5%. GNFC too, the revenues downtick of nearly 20%, margin squeeze at 8% versus 12% of a comparable. So these are a couple of stocks which are in focus this morning. There's also Gujarat Alkalis too. The EBITDA is sharply lower, 80% no less. So a big crackdown coming in there as well. Nikunj just flagged off the likes of Pidilite as well as Lupin. There's PI Industries though on the good news front. The Q2 numbers are above estimates. United Spirits, great set of numbers. Gross profit margins have risen to 80 basis points. But look at the street. That stock is still lower by about 1.5% as we speak. Although, to be fair, the entire liquor segment has been fairly buoyant. Radico, Khaitan and the likes as well included in that. Biocon is looking to divest 2 non-core formulations India business units into Eris Life Sciences. So Biocon, Eris, both those stocks are in focus. And there's Patanjali Foods as well, wherein the numbers have been impressive. So just bring up that stock as well for you on your screens right now. That stock as well holding up higher by 1% as we speak right now. So that's pretty much it when it comes to the newsmakers in trade. Also want to just check in on what some of the buzzers from yesterday are up to and where is it that they're actually holding up in trade. So just gonna cull that news list out. Just give me a second before that. Let's just see what the metals pack is doing, what private banking names are doing, considering they were the ones which were a tad bit of an underperformer yesterday. The likes of an ICICI Bank, IndusInd, Kotak, etc. were absolutely flat to red, and that's what kept the Nifty a little bit at bay. And I think today as well, that pretty much the same trend continues.